Oklo is one of the more interesting up-and-coming AI stocks in 2024. The price is up over 92% year to date, as the company is benefiting from the rising demand for artificial intelligence. Why is that the case? Well, the main constraint right now for, or I should say, one of the main constraints right now for developing newer data centers optimized for artificial intelligence is power. And Oklo aims to solve that by enhancing power availability to these large tech companies like Amazon, Alphabet, Microsoft, Meta Platforms, and others. So, a lot of investors are now interested in this stock because of the position it plays in developing power and providing power to these large tech companies. So, understandably, you might be interested in this stock. But before you make a decision on whether or not to buy this investment, these are some things that you should know about this company. So I'm going to share with you, at the very least, the things that you should know about this company before you make a decision. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with why the company was formed, right? They say that Oklo was born largely out of the view that there's a significant opportunity for advanced nuclear technology. They started to take advantage of this opportunity and deliver on their mission to provide clean, reliable, and affordable energy on a global scale. And this is the main driving force for demand for its products. Large tech companies, like those I mentioned in the beginning of the video, need more power. They need the power to be reliable, and more increasingly, they want the power to be clean. And so Oklo came in on the basis of that growing demand for that kind of power, and that this is not going to decrease. Demand is going to increase over the next decade or more as artificial intelligence grows, and the areas where artificial intelligence is implemented increases. Demand for computing power is going to increase, and so demand for this type of energy is going to increase. So already there are deals with existing nuclear facilities between Amazon and Talon and Microsoft and Constellation demonstrate this desire to have access to reliable power. The small reactor deals announced by Google and Kairos and Amazon and X Energy also demonstrate that big tech is willing to take long-term bets on new nuclear technologies to power their future operations. And one of the more interesting deals was that Oklo signed a similar deal with Equinix earlier this year for 500 megawatts of power. But more importantly, they were able to secure a $25 million prepayment for this power while the company develops the technology to serve that agreement. They got a prepayment, and these prepayments are going to be key because it's going to be expensive and risky for Oklo to develop and serve this technology. So Oklo is different between its competitors. It's differentiated from many of its conventional and advanced nuclear competitors because their business model is to build, own, and operate the powerhouses and provide customers with what they want: reliable, low-carbon electrons. And so as you can imagine, these are large projects with multi-billion-dollar price tags, and they require risk and cost sharing across multiple stakeholders and customers who don't want to necessarily take those risks. And so spreading these risks among the stakeholders is going to be a key strategic imperative for Oklo. Signing these deals and getting a prepayment, for instance, locking in multi-year agreements, getting the suppliers on board, getting the location established, all of these are going to be critical in facilitating these projects because when you're dealing with these kinds of projects, they are multi-billion dollars. And so that's larger risk, and businesses, they don't want risk, right? They want to decrease the risk, especially risk in areas they are not expert in. And so that's where Oklo comes in, takes on that risk, takes on that strategic, operational, and capital risk to develop this technology and give the tech companies the power that they want. So Oklo's technology is small and scalable. It allows them to build, own, and operate these plants in a sequenced manner that's expected to reduce risk to all stakeholders. And that's key. When you're dealing with something so innovative and so risky, it's already up here, the risk level. And so the cost of capital, the cost of that risk is really high. And each incremental decrease in risk really adds value to these projects and increases the probability of success. And so the small and scalable solution, allowing them to grow incrementally in a sequenced manner, really reduces risk. You don't have to build one huge facility that's going to determine the success of the entire company. You do it in a sequenced manner. You add one facility, you learn from that, and then the next one, you adapt those learnings, and incrementally, you kind of build out the business, which reduces risks instead of having to do it all at once, all in one bulk facility. And importantly, the nuclear sector continues to receive strong support from all levels of government who understand that they're not going to be able to provide the increasing power needed for the development of this new technology. And so, to help deliver that power, because governments want that economic activity within their state, within their jurisdiction, they're going to support Oklo building these facilities and help them get on board, give them the permitting, the support that they need to get them on board. And so their strategy is centered on three key pillars that they believe will position them well to change the way nuclear power is delivered. Their model is designed to make it easy for customers to buy clean power at scale, and they combine that with the small reactor size that allows them to achieve greater capital efficiency as a company and to match customer demand incrementally while offering resilient and redundant power solutions to their customers. So, this is their plan, and it's still very early days. They haven't even got their first reactor on board yet, and they're still in the permitting phases and signing customers and so on and so forth. The interest from customers right now is significant. They have their selection of customers to choose from. They have their selection of who to deal with in terms of customer demand. Demand is there. The difficulty now becomes in providing the technology, getting the permits, getting the government approvals, determining at what cost they can deliver this technology so that they can still generate a profit. That's why management has said that they're not in a hurry to sign customer deals just yet. They're more interested right now in making progress in developing the technology. And I think that's prudent because you first want to know how much it's going to cost you to deliver this technology before you sign deals. A lot of these innovative companies you've seen before, one that comes to mind is Plug Power, which tries to deliver this electrolyzer kind of alternative energy to companies. They've signed deals that sells their product, their energy at a price that's so low that they're losing so much money on the bottom line. And those agreements have been secured and signed for so many years that it's hard for them to get out from under those deals. And so I think for Oklo to wait to sign these agreements, I think is more prudent instead of just rushing ahead and signing these deals. So, if you're interested in Oklo, these are things that you should know about the company. At the very least, there's a lot more to learn about this innovative company. And I've got several videos on my channel about this company I recommend watching. And these are, at the very least, things that you should know. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.